All right, hello, everyone. Happy Thursday. Welcome to Weekly Market Check-in here with myself, Greta Wall. I'm your host. I'm joined by David Prince, the leader of T3 Live's Inner Circle virtual trading floor. David, this is our first of the new year after a couple weeks off, so Happy New Year to you. How's your Thursday going for trading so far?
Like I think many, it's been a hell of a week, and so far so good. Very satisfied with the week.
All right, good stuff. All right, our topic of today is that inflation is back in focus for the market. We got some inflation data this week, and it was kind to Wall Street. We got a light PPI and a light CPI, both of those coming in cooler than expected, and that boosted the market over the past two sessions. This came after a hot jobs report last Friday that had spooked the market. You know, the Fed had really declared victory on inflation and said they were focused on the labor market. And then the jobs report came in hot by like 100,000 jobs, and everyone was like, whoa, what do we do here? But the inflation data was friendly. You sent out this tweet yesterday saying the real ones took risk Monday and Tuesday and told you so. This was a week that a lot of people, I think, were risk off heading into these numbers, but you yourself and many others took risk. Talk about how you approached this week and then the reaction to the data today. Or the past 2 days.
I wrote a little bit less, childlike treat than that. That refers to that. And basically what that all refers to is, hey, there's moments, by the way, for anyone watching, I'm getting new curtains. Sorry about the light. So right now there's this kind of fear in the market, or there was on Friday and Monday. And there are a lot of kind of traders that are position focused, but then when volatility comes and the big number comes, they get flat, right? And they just want to wait and not take unneeded risk. And I always say, as a trader / investor, you have to have some belief beyond a day, beyond 24 hours, 48 hours. So going into the CPI, we had a 3-day sequence of lower lows, filling the gap on the election, right? Which on the Qs were about 497, 496, and 100-day moving average right there. And I said on Friday, this sets up great. Monday's probably going to open up and make our life difficult. But if it doesn't, if we get a follow through to the downside and some fear and the VIX higher, I don't care about CPI. I care about risk reward. And for the first time in about 3 weeks, I see more longs I like than a while, because I've been really pretty risk off. We have constantly always have longs. But I've been constantly short and long, buying hedges. And I said, so we have a pullback. So the Qs were now down 7%. And I simply said, there are stocks, regardless of a hot CPI, if that's what happens. I didn't pretend to know the CPI. But I said, regardless of PPI and CPI, there are stocks and levels where I think we get paid regardless of the print. And that's what I look for. So for me, that was Palantir. For me, that was the Qs. And I added a little turbo engine to that by using TQQ. And focusing on our core positions, Kava, cores, and remaining long, right? Even adding to IBIT recently when Bitcoin was down at 91,000. Didn't feel good. I thought it was going to break. But I said, okay, these are instruments that I believe can work regardless of what happens with CPI. CPI came out. Is it lucky? Yeah. Is it basically you put yourself in the position to be lucky because you're willing to look beyond one print? Yes. And what I try and teach people, the biggest lesson is if you're always all in or all out, you're always a sucker. Like you're always chasing your tail. So you have to think beyond just one print. Anyway, that's how we played it, primarily through those two, because I don't believe you need, the market's bending. You can really get hurt buying 20 positions. So the one thing I said is don't buy them all. Pick 2 or 3 of your favorites. For me, the Qs were simple because it encompasses so much. And Palantir, after a 22, 23% correction, and we were on the short side of it too, felt like a really good spot. So that's how we played it.
When it comes to taking risk ahead of events like this, and you don't know what the CPI is going to be and how the market's going to react. Even if we got a light CPI, the market could have reacted negatively.
Take some profits ahead of it, right?
So yeah, what is the mental set for you, mental space for you to say I can take this risk?
It's such a good question. I should have gone over. So it's, hey, we're buying CQQ on the Qs going to 500. Then you get a rally to 509. Do you just say, hey, that's the bottom and we're just going higher? Yeah, like I didn't know. I don't know what CPI is. So do you sell 50, 60, 70%? Absolutely. Did we? Sure. Do you get lucky and then get a pullback all the way to 502, actually 501, and maybe put some risk back on because you're playing from ahead? Sure. Do you go the same size as that Monday when everyone's at max fear? No way. Then you get a bounce at the end of the day into CPI. Do you take some off? Absolutely. And now it's Wednesday morning pre-CPI, and you have a hell of a cushion. Palantir's bounce 4 points, TQQ's bounce 4 points, or QQQ 9 points. And you know what? A hot CPI won't put you off sides where, oh my God, I'm down thousands of dollars. How do I fix it? No, you're ahead of the game. And if it's a soft print, you still have some, meat on the bone or skin in the game. And if it's a really hot print, you can still play from ahead. So what? Every trade's not going to be up all the time. No one makes money that way. And that's how it works. But it's by doing it right on Monday and Tuesday so you can take that risk on Wednesday.
Yeah. And, just shows the importance of, actually being a trader versus an investor in environments like this.
Hey, there are times to invest.
You're selling
right?
and buying and all throughout the day.
Like
I've been watching your trades, and you'll buy TQQ and sell it, and then buy it again and sell it, and buy it again and sell it.
No, we did it all day today.
Taking those profits, yeah.
And then other times to invest. I was going to say, like Kava recently at 511s. I said, I'm investing here, and I hope it goes lower to really. Did I say 511s? Because that'd be kind of absurd. Obviously, not 511. So recently, as it came into where is it now? 117. Okay, so it was like right under 112. So as it came into 111s, we bought some. Went higher to 120. I sold some, but I held some, and I said, I'm just holding this. And I said, if it pulls back, that's one that's an investment for us. So when it got to 110. I didn't buy anymore. I said, if it gets closer to the 200-day, we'll buy more, but I'm also not going risk off. So my point is there are some stocks you got to invest in and like Core Scientific, another one we bought in the 13s. It went to 15, I trimmed some, I held some. It went all the way to 13 recently, I held some. Now it's, moving back up. But I think you have to actually invest in companies and kind of think of them beyond 2 days. Doesn't mean you have to invest a year out. So there are some investments that aren't just buy, sell, buy, sell. We usually have 3 or 4 of those that we kind of just put away. Kava and Core Scientific are 2 of them right now.
All right. Another story for the market today is the Treasury Secretary nominee is testifying in the Senate Banking Committee. That's Scott Bessent. That's Trump's nominee to be the Treasury Secretary. The market is, of course, focused on the incoming administration's plans for tariffs. The market seemed to like his nomination. We got a little bump back when he was nominated. When it comes to the tariff plans and Trump's economic plans, do you think the market at this point is just in a wait and see approach and we're going to rally and do whatever we want until then and we'll deal with that when it starts happening? Or are we planning for it?
I don't mean to be philosophical, but there is something here that's important. First time around when he's president and he's talking China and tariffs, and it's more of a shock, right? And then each time another tweet comes out, it's less of a shock. And the market responds less aggressively, right? And very often those became buying opportunities. Well, now it's the second time around, right, in office. And he has even more, like the people he's putting around him this time around, the one thing, and I'm not big into politics, I try not talk about them, but he's putting some smart people around him. Like the people he's picking this time around is way different than last time, in my opinion. I think it is so well thought out that I do think people respond less and less to potential tariffs or not, because they're looking at his team. And anyone who knows a great CEO knows a lot of it is the team you build around you. His team is like rock star after rock star. So I'm pretty comfortable that tariffs could be an issue, but we also have some really smart people around him to keep them in check and not get crazy where, he kind of starts to go too far or hurt markets or himself. So it's not front and center fear to me. And I don't think it will be to the markets because they've gotten used to it and because of the team he's built around himself. Like anyone who worked with Scott, all they have to say is, this guy's a rock star. He is so bright, it's not even funny. So at least anyone I know that has worked with the guy. And I've talked to 4 different people that have worked with him. All say the same thing.
Good stuff. Monday is Inauguration Day. We'll officially have the new administration as of Monday. The market will be closed, but it's not for Inauguration Day. It's actually for MLK Day. It just happens to fall on the same day this year. Do you think we have a potential for Trump trade 2.0, another rally post-inauguration?
Well, you got to kind of adjust to the market. I always say investing is one thing, trading's another. You constantly are adjusting, right? The more you adjust, the more money you make. There was the conventional thought, rally into inauguration, and then perhaps, like a little bit of sell the news. But we already had a pullback. So I think it's somewhere between. I don't think it's as easy as Trump 2.0, and I don't think we get that sell-off everyone anticipated. I think it's right in the middle. So could I see Trump-esque assets outperform Tesla, Bitcoin, right now Meta, because Mark's really sided himself with President-elect Trump. Could that work out well? Absolutely. So that's kind of what I think. But I wouldn't get overly bullish because I do think I expect volatility a lot this year. Like, I'm not saying that because it's volatile. I wrote in my end of the year note, expect volatility. Expect to buy the dips and that it'll still work, but not 2% dips that maybe we get 10 and 20% corrections. I still think that exists. So I think you have to be cognizant that when the Qs go from 499 to 520 this morning, yeah, sure, they may sell off, but buy it. And sure enough, this morning, one of the first things I did, 514s, 515s, buy Qs, right? So I think that's the market we're in for a bit. And is Tesla like bad because it's down today? No. After that deliveries print, it was down, what, 370? So back to almost 430. The way I look at it is we're in a market that, like, hey, the stock just bounced off bad news, $60. Could it pull back? Sure. That's the market for now. Some people call it a choppy mess. I think good traders call it opportunity because the ranges are getting wider. I think that's the market we're in for over the next week or two. But I'm definitely more bullish, be an idiot not to be, going into inauguration, going into after all these prints from all the banks, JPM, Citigroup. If you look at the percentage gains, this is a great banking season. Wells Fargo and Citigroup outperformed JP Morgan yesterday. That's a sign of good news. Marvell and Broadcom are up today and look great, while NVIDIA's gone negative. That's healthy. We don't rely on NVIDIA as much. We don't rely on JPM. So overall, it's pretty darn bullish out there. Like, I'd like the market to pull back 10, 20% to give a better investing opportunity. But right now, there's a lot of good news out there, not to mention the bond market, CPI, PPI.
Yeah. You mentioned you expect this year to be more volatile, lots more volatility. If you think back to the last really volatile session, really volatile year in the market, I'd say, 2020, 2021. Does an expectation for volatility, are you excited about 25 and the possibility
I don't
of
know
way more trading opportunities?
I don't see like Trump would have to say some crazy stuff, and if anyone's capable, it's him, but I don't know. So I'm not expecting 20, right? COVID volatility is different, right? TIVX went from 35 to 1,000 in 3 days. Think about it. So when I say volatility, what other people think as indecision and shock is normal. We used to see volatility like that all the time.
Right.
And I just think more of that. Really, we've had this buy and, you can buy higher and everything's going to just go up and up. I mean, Palantir, it seemed like in a few months went from 20 to 85. That's not normal, right? It's not like a tiny $2 billion company. So I just think more of that. Hey, we just saw it like with these wild quantum stocks, right? I mean, the Rigetti, which is like, not the quality one, right? But it's kind of the face of the whole craziness. It went from under $1 or $2 to over 20. Friday after hours, it was under 6. This morning, it was 11 something. We were shorting it at 1160 this morning. Then it's like 10 before earlier today. And now it's back. I just think a lot of that, which if you're an active trader is great. If you're an investor, it means do a little bit less and wait for your spots.
All right. You mentioned the bank earnings. Q4 earnings season has officially begun. As you mentioned, the got kicked off good with the banks. It was weird getting a JP Morgan report on a Wednesday or Friday,
Yep.
but good start. What is your focus heading into this earnings season? It's a long, long earnings season until we get NVIDIA at the very end.
Quality growth companies. So that means Amazon, I still think can work because the consumer is so strong. That means Alphabet, which has been so good to me. We owned it down at 165 and rode it to right above 200, and I got flat. I think I'll be back there again because really on a valuation basis, I get it. Government, some issues in AI, but it's cheap. It's literally carries the lowest PE. So if they continue to cut costs like they've been outwardly doing, and make inroads in AI and really kind of play a little bit of catch up, there's a lot of upside there. So quality, Max 7. And then moving on, there's the second and third tier names that have, some of them have been like last quarter, they made our quarter. It wasn't Google that made my quarter. It was ALAB, Astera, right? Which has turned out to be a real competitor to a part of Broadcom's business and has just been an absolute rock star to us. We were in the 80s. It went to like 140. I'm a buyer of dips there, right? I think they'll have another beautiful quarter. If you look at Affirm, they had a breakout quarter. I'm a buyer of dips there. Not all of them at the same time because, again, I think volatility is the name of the game. So at the right prices. Recently, Palantir, overvalued or not, price action is what matters. And I started to think it was a great short. Like my plan was always, hey, beginning of the year, Palantir is probably going to get slaughtered. People just are waiting to take profits. They're people up so much. And you like, if you're going to be in it, it's really from the short side. And then it pulls back. Everyone's favorite stock, especially retail, pulls back 23, 24%. You get long. So my point is, expensive or not, if Palantir got low enough, I'd even look at Palantir long. No doubt Block seems to have some solid momentum. Another big winner from last quarter, and the consumer remains strong, Shopify. So those are all names I'm interested in at the right price on pullbacks. Most recently, the one we went after and got aggressive with was Palantir, but most of those names I will be revisiting on pullbacks in the market. Kava, long, and think we'll have several great quarters.
What do you think the overall theme is going to be for this earnings season? What the market is focused on for companies?
Margins and growth in a higher interest rate environment. So there is that, hey, even though maybe we see inflation waning, we might not get as many cuts as everyone wants. I get it. We got some good news this week. So the one cut maybe is 2 cuts or 3 cuts. But I think that it's going to be, hey, we can still operate and do well even without yields crashing. And I think if you can find companies that can prosper in that environment, you can do really well. And I also think it's about finding the new supreme candidates. I'm just making that term up. But what do I mean by that? I mean, NVIDIA doesn't rule the market anymore. It's not that it's not a great company. It's not that it doesn't trade at a very cheap valuation. But you can see the institutions relying less and less on NVIDIA and perhaps going to Marvell, which is still up with the NASDAQ down 63, over 2% today, right? KLA is up 7%. Broadcom's up right now 2%. So you can see the institutional reliance on some of the stocks that we like make or break the market, less so. So I think this quarter is like, can Marvell put up another beautiful quarter? And then perhaps my favorite of all the second tier is going to be Snowflake. I think they cut all the fat out of the company. Free cash flow is going to really impress people. And I think it's going back to 200 at the very least. So those are probably the names I'm looking at. Again, I'm not going to own them all at once because I'm very price conscious in a very volatile environment. But Snowflake, big fan of into earnings season. So I will definitely own it. Longer calls pre the print.
All right. You sent out this tweet on Tuesday. You said, I had a solid day after sizing up in TQQQ and Palantir yesterday. However, I felt best about the loss I took. I was barely down, but didn't feel right about the setup. I took less than a $1 loss on the name. It closed several points lower. Half the battle is how you manage your losers. We all have them, but some deal and some pray. Hope is not a strategy. So talk about what you were saying here, and the importance of cutting your losses early and focusing on other things.
Sure. Well, there are 2 things. First off, sometimes for me, like it's different. There's a certain part of my money that is pure spec, and I literally have been down, as long as I'm sized not too aggressively, I'll be down 40% in a stock to make 3, 4, 500% in a biotech or some wild concept. But the key to that is I have to have minimal like allocation to it, right? It can't be 5% of my portfolio or else I'm doing it wrong. And then there's the active money management where a lot of people are following me and I pick a stock and something that I think should happen doesn't happen, whether it's what the CEO says, whether it's the price action, whether or not it's interest rates. So with this particular stock, the CEO was at the JPM healthcare conference, and everything he said, absolutely fine for me. Everything I heard, there was nothing that indicated there was anything wrong. But everything I heard, I thought would not be taken by the market well. So I said to Inner Circle, I said, listen, it's not whether I like it long-term or not. I don't like what I heard. And here's the key, in terms of how the market's going to respond, not what I think. And here's the biggest difference. What I think just doesn't matter. No one gives an F about what David Prince thinks because I'm nobody. So I kept thinking, ooh, after what I heard, what's the market going to think? What's my downside? My downside could be 30, maybe 30% short term. I'm taking a loss. So a lot of people are really into this stock. So that's why I keep not saying the name, but most people know what I'm talking about. Anyway, so after buying it right below 39, pre-market, I said, I'm done at 38. And yeah, it was a decent decision because it's under 33. And I think what's most important though is, and by the way, I wouldn't be shocked if this stock's 50 or 60, but I can buy a lot cheaper now. But I just looked at it and thought, you know, it doesn't feel right. This is how I think the market's going to respond. I'm not excited to admit I'm wrong. Like 2 days later, I bought it a couple of days ago. So that's not exciting in terms of ego. I'm like, this kind of sucks. Yeah, I got to admit I'm wrong. And then maybe it'll go up in my face. Anyway, I did that. It turned out it was the right decision. And frankly, I felt better about that than kind of a monster win in the Qs. So that's what that tweet is about.
All right. We have a question from YouTube asking how they can join your room. So here we go. You can go to t3live.com/DP if you'd like to apply to join the Inner Circle. Michael asked if there are requirements. There are requirements to be part of the Inner Circle. You must trade with at least $100,000 account. And what is it, 2 years of experience, David?
Yeah, the way
I say it
is,
can't be a beginner.
You have to be somewhat knowledgeable, right? To some degree. If you're really like, hey, what's a call or what's a put, or, you know, I've never shorted before, it might be a bit advanced for someone.
This trader, he says he was a previous prop trader with T3, so I'd assume he has some experience here. So you can go to t3live.com/DP to apply. Amber is out on vacation, so she will get back to you as soon as she's back. But you can go ahead and fill out that application there. So screenshot from the room the other day. You can see this one trader I joined with 500,000 in August. Now I sit at 1.3 million. I would have definitely gave back the gains if it wasn't for you keeping us disciplined. DP, talk about some of the transformations you've seen in traders yourself in the room like this.
I think, to put it in a nutshell, I mean, there's like a buddy who's owns a huge medical business. He's a doctor, but he's more a businessman. And guy came to me, had lost millions. I mean, maybe 20 million. And that's since 2020. And I'm like, what the hell is wrong with you? Anyway, we got to chatting and I realized he's a super bright guy. He's just a gambler. He's not a trader. And I was just teaching him how to stop gambling and actually look at every idea as a risk reward proposition and not pressing any, excuse me, God, you know what, buttons, unless frankly, I say it's okay, because this guy's a gambler. He needed someone to say no. He needed a pit boss to say, get out of the casino. And I did that. Now sometimes the guy will send me, you know, this sounds promotional, but you asked, so he'll send me, you know, I made $1 million today. Thank you. Like, wow, this is cool. I think I know what I'm doing again. And I literally that day said, I'm really happy for you. Please remember to stop gambling and know how you got here. And I've seen, you know, smaller guys who started with 100 grand turn into 300 and 400. And it's always the same thing. It's, they don't go rogue. That means they don't tell me what stock they love, because odds are I know more than them, not because I'm smarter, but because I have like 30 years on them, right? And I know more about the stocks we're buying than them. And if they do have an idea, we discuss it, we chat about it. And most importantly, they take losses if we're wrong early, they don't hide from them. And the other most important part, if there's a winner, instead of counting their P&L, oh my God, I'm up $5,000, and it's the right stock at the right time, they realize they might make 10 or 20 or 30. And that's how I've seen these smaller accounts really grow, because of discipline, constant discipline over and over. Like what I screamed about today, because a couple of people are like, what do you love today? I'm like, it's Thursday. It's been a week of just nirvana. I don't love anything. So if you go big on anything today, just like stop. Monday was awesome. Tuesday was awesome. Wednesday was unbelievable. There's not much to do today, so do less. The people that are transformative, that are having these wild moves, are all doing the same thing. They are not missing Monday, Tuesday, and Wednesday, and they are not, if they missed it, trying to recreate it today. So rather than get too granular, I mean, there's some wonderful people. There's one kid I'll call out. His name's Carl. This guy, I don't want to exaggerate. I think he's up 300-400, whatever he is. It was a small account. He went up 300-400%, but he had like one stock. A lot of them were my ideas, and then there was this one other stock that was up like 100% from the bottom. Recently crashed 70%, then bounced 100%. And he had half of his account. I said, you should leave. Like, you should quit. I don't want to be a part of your account. I don't want to help you until you size down, because even if the stock goes up, I'm giving you the right information. And the day most likely it corrects, because you don't own a Mag 7 name that with big earnings. The day it corrects 30-40%, you're going to come crying to me, and I ain't going to help. So this kid who had like 70% of the account. Anyway, the point is he finally listened to me. It took like 2 weeks of me screaming it. He did. And sure enough, that stock in a 2-day period went from 22 to 14. And he had taken his account up like 400%. He would have wiped half that out in a day. So my point is, it's that. It's listening. It's not gambling. It's taking profits. It's not being levered to one idea too much. It's constant discipline and communication.
All right, good stuff. Michael says he meets those requirements, so he'll reach out when the time is right. So maybe we'll get a new member in the room. All right, so again, everyone watching us, you go to t3live.com/DP to apply to join David and Kira and Rick and all of the other members of the Inner Circle. Thank you for doing this today, David. Have a great rest of your trading day and a great rest of your week. See you next week.
Bye-bye. Have a great day, guys.